Hey guys, welcome back to Trading with Sarah. I hope everybody is doing great. In today's video, I'm going to be sharing with you guys a really powerful trading strategy which you can use to be able to predict when the price is about to go up or down. This is a strategy that works really well on pairs like gold, Gbpusd, Audusd, Eurusd, things like that. Okay, this is a strategy I myself use, and a lot of the times I am always making profits with this strategy. In fact, I don't even want to call this a strategy. I believe this is actually just the way the market works, but a lot of people don't understand this, especially beginners. They don't really understand. So I'm going to break it down to you guys step by step. I explained this strategy a lot during my TikTok live. For those who have been following my TikTok live for a while now, then this is probably something that's nothing new to you. But if this is your first time watching this, tuning into this YouTube channel, then this is definitely maybe something new to you. Okay. So I encourage everybody, make sure you subscribe to my YouTube channel. Give this video a thumbs up, okay? If you want to be getting more videos like this, more educational videos on Forex trading, crypto trading, then this is the right place for you. Make sure you hit that thumbs up and like this video, subscribe to the channel, turn on your notification bell so that you can get notified whenever I make a video. Okay, so without further ado, let's get started. I'm actually going to choose gold. Okay. Let me just open up a random chart here on gold. This current chart that I have open is actually a chart that I'm already using. So I'm going to select the random chart. Okay. So here. So now, before I go and start showing you guys examples of this setup working out, I'm going to explain a little bit what this is. Okay, this has to do with market structure. Okay, as you may or may not know, there are three types of trends that the market can ever be in. Okay, either the price is trending up. Okay, either it's in an uptrend, which means it's forming higher highs and higher lows. Okay, so this is what an option look like. The price is forming new highs and new lows. Each new high is always higher than the previous high, and each new low is always higher than the previous low. Okay, so it's forming higher highs and higher lows. Now, the other type of trend that the market can be in, okay, is a downtrend. So this is when the price is forming lower highs and lower lows. Okay, this is what it looks like when the price is in a downtrend. The candlesticks are going like this. Each new low is lower than the previous low. Each new high is lower than the previous high, and then the price just continues like that. Okay, so this what I have here, this is called an uptrend. Okay, and then this one here, this is called a downtrend. Okay. And then finally, the other type of trend that we have is called sideways trend. This is when the price is just consolidating, it's just going side to side, neither, it's just moving side to side. So when the price is doing things like this is called a sideways trend. All right. So when the price is in an uptrend like this, the best trades for you to be looking for is to buy. You want to be on the buy side, okay? When the price is in a downtrend like this, the best trades for you to take is a sell. You want to be on the sell side. And when the price is ranging like this, usually it's best to just stay out of the market. Unless you're like me who have many years of experience in trading, then you can also trade when the price is in a sideways trend. There's actually like a lot of trading opportunities that are available when the price is in a sideways trend. Okay, just moving sideways. So now let's start with the uptrend. All right, so I told you guys when the price is in an uptrend, the best trade for you to be taking is a buy. Now, where exactly do you buy? A lot of people, they know this, they know, yes, when price is an uptrend, I should be looking for buy, but they don't know exactly where they should be buying. Okay, so I'm going to break it down for you so you understand. Okay, because understanding is key. If you can understand exactly what happens when the price is in an uptrend, as it is forming this pattern and all that, if you understand what is happening, you'll be able to understand exactly where to be buying. Okay, so let's start with the uptrend here. All right, so I have an uptrend here. This is an example of an uptrend. So as we know that when the price is an uptrend, what is it doing? It is forming higher highs and higher lows, correct? So higher highs and higher lows. By the way, to identify an uptrend, you need to be able to see at least two previous higher highs. If we have two previous higher highs, then we know that the market is in an uptrend. All right. So when the price is an uptrend, it's forming higher highs and higher lows, correct? Now, each time the price is able to break above a high, okay, each time the price is able to break above an high, that high turns into support. Okay, in fact, let me actually take it back a little bit. Whenever the price forms a new high and then it gets rejected, right? We know it's a new high because the price got rejected and then it dropped. So that level where the price got rejected can be known as a resistance level. Okay, so anytime the price gets rejected at a level and then it drops, okay, it looks like it's a new high. You need to mark it down because that level is now the current resistance on that time period. Okay, so you mark it down. So basically what's going to happen is when the price comes back to this area here where I have the black line, okay, so that new high where the price just formed, when the price comes back to that level, one of two things can happen. Either one, the price breaks it to go higher, or the price gets rejected and then it goes back down. Okay. Now, if the price is able to break above this high, okay, if it's able to successfully break above that high, what's going to happen is this is going to turn into support. Initially it was resistance, however it turns into support. You understand? So as soon as you notice price successfully breaks above this high, what you want to do now is to now mark the previous higher low. This is basically the lowest point price went to. So from where it got rejected, it then dropped. Okay, so that low point where it dropped to before finally coming back to break the resistance, that is basically the previous higher low. So you need to mark that as well. Okay, so you mark that like this, and then yeah, so you have marked the high which price just broke above, and now you have marked the previous low as well. Okay, so now here's what you are going to do next. Okay, you have done this. Now this is what's gonna happen. The price, once it breaks this high, aka resistance, it is going to come back down. Okay, this is how the market is moving. It is going to come back down. Sometimes there are those times when it may not come back, but majority of the time it's going to come back. Okay, and when it comes back, this is where you want to look for buying. Now there are three areas where you can look for buy, and I'm going to explain it to you guys right now. Okay, so number one, okay, the first the first area where you can look for potential buying opportunity is right here. Okay, so remember I told you this high, as soon as the price broke it, it was before the price broke it, it was once a resistance, but now that the price has been able to successfully break it, it turns into support. As you may know, support is a level that is supposed to help the price to push back up, right? So this is one area that you can look for buy. The other area where you can look for buy is at the previous, okay, near the previous higher low. Okay, so the price comes back near this previous higher low. This is another good area to look for a buy. Okay, and the third area, I did say there's three areas, right? The third area, which is what most people may or may not know, is there is something I called internal support. Okay, and this is something that is found between the this is for something that is found between this high, aka resistance price just broke, and this higher low. Okay, so it is in the form of a bearish candlestick followed by a bullish candlestick. Okay, this is it right here. Internal support is found. It is in the form of a bearish candlestick followed by a bullish candlestick. In other words, a red candlestick followed by a green candlestick. Okay, a candlestick that shows the price has gone down and a candlestick that shows the price has gone up. Okay, so you always start off with the time frame that you are analyzing, and the time frame that I recommend, the lowest one that you can start is 1 hour. Okay, 1 hour is like the lowest time frame I recommend analyzing using this strategy. Okay, way of analyzing. So you start with the 1 hour time frame. You want to see if there is any formation of a red candlestick followed by a green candlestick right right after the breakout. Okay, so from the candle that broke that resistance right below 8, the next area where you see a red candlestick followed by a green candlestick, you need to mark it down. There's a tool here that I use here on TradingView. So you click on this and then you select this rectangle. Okay, so what I do is I'm going to put these two candles within the box. From the top wick to the bottom wick, I'm going to put them in the box like this. Okay, so let me just move this one here to the side. Okay, so and let me remove this for no confusion. Okay, so this is what I have done. Okay, I have marked it. Now what I'm looking at doing, this is an area to look for potential buy. Okay, so this is the recent one. If there's any other, let's say there's another one, there's another formation of a bearish candlestick followed by a bullish candlestick. Okay, below this one here, let me just put this like this. Okay, if there's another one here, what am I gonna do? I do not need to mark it. Okay, I marked only the recent one, and then I'll focus on that one first. This one here, I'm only going to focus on this one. I'm only going to mark it if the price doesn't hold this support. Okay, if the price doesn't hold this support, then I'm going to look at marking the next one, and I'm expecting the price to come and hold this next support. Okay, so how does this work? Okay, when you've marked the internal support, like I said, you start with the time frame that you're looking at, which is 1 hour. Okay, now if, for example, for any reason you look at the 1 hour, you don't see any internal support, it means that all you see is green candlestick, green candlestick, green candlestick. That's it from all the way to when the price breaks out. Okay, what you're going to do now is now go to time frame that is lower than 1 hour. So you go down to 45 minutes and then see if there's any formation there. If there's none, then what you want to do is go to 30 minutes. And then after the 30 minutes, that is basically the end. Okay, there's no other time frame that you need to go down. 30 minutes is like the last one. Okay, so what has to happen now is, after you've identified this internal support, what you are going to be doing now is wait for the price to come to this internal support. Okay, it has to come either all the way through or at least like halfway to it. Okay, let me try to draw that again. So we wait for the price to come all the way down. Okay, all the way down. Doesn't have to be all the way down, at least like, let's just say, close enough to the end. This is good enough. Okay, now when the price comes here, usually it's going to be coming in the formation of bearish candlestick, bearish candlestick. When the price taps into this area, usually you see bearish candlestick, bearish candlestick. Now before you go ahead and buy at this level, you need to wait for 1 hour bullish candlestick. Okay, you need to wait for price to close either at 30 minutes or a 1 hour bearish candlestick. When the price is able to successfully close that 30 minutes or 1 hour bearish candlestick at this internal support, then the next thing that's going to happen is that the price is going to go back to this high. Okay, this new high that it just created, this is where the price is going to go. If it doesn't make it exactly there, it's going to make its way halfway to that point. Okay, so you want to go ahead and go long, aka buy, and then target the halfway point to this high as you take profit number one, and then target the exact high as your take profit number 2. Okay. And now your stop loss, this is the part that is tricky. And then a lot of people may watch this and say, whoa, this is a huge stop loss. Okay. But this is the part that people don't understand. The stop loss, where you need to set your stop loss, it has to be at a reasonable area. And the most reasonable area to set your stop loss is the previous low. Okay. So this here is a low. This is the current higher low. The previous higher low is this one here. So I will set my stop loss slightly below this, because the reason why I'm setting it here, because just because I'm buying here, it does not mean price cannot go down here. There are times when, even though price has given us a confirmation it's going to go up, there are times when it still break the low, head down. Okay, sometimes it may even break this. However, the one thing it's going to make sure it doesn't break, it is this previous higher low. Okay, it could break this current low and then still be able to push back up to that high, the new high that it just created. So this is why we're setting the stop loss at this level. Okay, so that's basically it. Now, if the price doesn't hold this, meaning you don't see any 1 hour candle closing bullish at that internal support, now you're going to just go to the next one. So let's say this is the next one here. I will now just wait and then still wait for the same confirmation and then buy. Okay, so that's how it works. Now with this top part, I told you this here is the first part to buy here. This part here is a good area to buy, but it is not very strong, because majority of the time the price tends to not hold it at all. When the price comes here, it tends to not respect it. And this part here, before you buy, it's usually best to wait for the price to close at 30 minutes or 1 hour bullish candlestick once it taps into that area. When it taps into that area and you see it successfully closes a bullish candlestick on the 30 minutes or the 1 hour time frame, then you can go ahead and buy and then target that high as a TP. Okay, so the next area to buy is all the way down over here, this previous higher low. And this, I would say, is one of the best areas to buy, because with this one here, you don't need to wait for any confirmation. Okay, you don't need to wait for the price to close 1 hour bullish candlestick before you can buy. No, the moment the price just arrives close enough, okay, it doesn't have to tap exactly that low. Okay, as long as it's like close enough to it, you can already enter your buy. Now, when you buy from here, the take profit is going to be all the way to this top part. Okay, so this high here, the price just broke. Okay, so that resistance, which is now support, this is going to be where your take profit is going to be at. Do you understand? And then your stop loss will have to be at the previous higher low. Okay, still the previous higher low, no matter what. So this here is the best area. The price always, if it doesn't, it just means that some news or whatever came out, but majority of the time the price is going to go all the way back to this level here. Okay, so this is how you can basically trade when the price is in an uptrend. All right, now this new high, this current high that the price just formed, is now your new resistance. So you want to also mark it down, because once the price is able to break above that resistance, you basically need to now adjust. So let's say, for example, let me just delete all this stuff here. Okay, this is here my current, this is my current resistance, right? Initially, this was my resistance, price broke above it, and now it has formed a new resistance. I know it's a new resistance because after the price got to that level, it stopped going up, it started coming down. Exactly. So this makes that level a resistance. So I'm going to grab a line, horizontal line, and then just mark it. This horizontal line, you can get it right over here. It's called horizontal rate. Okay, so you just mark it, and now once the price, price comes here and is able to break above it, for example, I'll just basically do the same thing. Now I have a new resistance that is now support, and now I'm going to basically mark it. Okay, so I'll remove this red line because this is now my new support, this previous high, and then my new higher low it's not going to be this one. Let's just say, for example, that was the lowest point price went to after it got rejected here. So this is going to be my new higher low. So I'm basically going to be trading the same thing. If there's any internal support in this zone, I would just mark it. If there's none, it's fine. If there's no internal support at all, after you've checked all the time frame, like 1 hour, 45 minutes, and 30 minutes, and you don't see any internal support, then you are going to just look for buying opportunity when the price comes to the previous higher low, and then you buy. Okay. So yeah, so basically that is it, guys. This is how you should be trading when the price is in an uptrend. This is a really powerful way to be trading. Now, what I'm going to be doing is now showing you examples on the chart here, because I don't want to, just be saying words and all that. I want to actually show you proof of this playing out. Okay, I want to show you proof of this playing out and all that. So let me try to go here, go to the 1 hour time frame for gold. All right, let's go to the 1 hour time frame, and let me try to find an example here. Perfect. So you can see right here, gold, we have an uptrend. Okay, there's an uptrend right here. I'm going to use the replay so it makes more sense. Okay, so here I have prices forming a new high. This is the current high. Now, before this here was our previous high. So what I'm going to do is mark that high like this, okay? I marked that high, and then now I'm going to mark the low point, okay? So after the price got rejected here, it dropped all the way down here. So I'm going to mark that low point, okay? Now, in terms of internal support, okay, I can see we have one right here on this 1 hour time frame. We have this bearish candlestick followed by this bullish candlestick. So I'm going to mark it, okay? And as I'm marking it, I'm going to extend this horizontal box to the right, okay? Just a little bit to the right. And then that's it. So now I'm going to look for buying either right here. If the price comes there and it closes a 1 hour bullish candlestick, then I'll buy. Or if the price comes to this internal support and it closes a 1 hour bullish candlestick, then I'll buy. Okay, either 30 minutes or 1 hour, then I'll buy. Or when price comes near this higher low, I'm going to buy without waiting for any confirmation. Okay. And then, yeah, so let's play this. Let's play it and see how the price actually played out using this. Let me play it. Okay. So you guys can see with this, this chart, what the price did, it didn't hold the top part. Okay, this top part here is where I would have and looked for buy. We didn't get any 1 hour bullish candlestick. I don't think we got any on the 30 minutes either. Okay, actually we did get on the 30 minutes. Yeah, so the 30 minutes we did, but by the time the candlestick closed, price already revisited that high. So it would be too late to enter the trade. Okay, so let me go back to the 1 hour. Now when we come to the 1 hour, we can see when the price came to the internal support, it actually broke right through it. So we see this bearish candlestick, it actually broke right through it. It didn't hold it at all. We didn't get 1 hour bullish candlestick. Price actually broke right through it. Okay, so if that's the case, what are we going to look to do is we're going to look to buy at this low instead. Okay, so where I have the black line at the bottom, this is where I'm going to buy. And with this area, remember, I don't need to wait for any confirmation. I would buy right away and then target this top part here as my TP. Okay, so this is where from here, I'm expecting the gold price to go up here. Okay, so let me play it and see how this played out. Okay, look at that, guys. Do you see how amazing that played out? The price literally, after it came here, it held the support, okay, held that low point, and then it went all the way up here. Okay, so take profit would have been 8, stop loss would have been right below where's the previous higher low. Okay, so we have to set the stop loss around this area. Okay, so this is where I would set the stop loss. Sorry, this is the stop loss. It will be right here, okay, because this is the previous higher low. So I'll set the stop loss slightly below this. Okay, perfect example that I just showed you of this setup playing out. I'm going to try to find another example. Okay, so here we have another setup right here. So I have a high, okay, aka resistance that the price broke. Okay, then I have the low right here. Okay, so internal support, we just have this one right here, which when we connect these two candles, this bearish and the bullish candlestick, you can see it actually it stops where the low is. So we don't need to mark it. If the candlestick that is forming, the internal support, if it's already near that previous higher low, you don't need to like grab the rectangle box and then, there's no point because the price is going to come all the way down here anyways where the low is, and we're going to buy anyways. Okay, so with this one here, let's check 30 minutes. Remember, like I said, when you are marking the internal support, okay, you are going to start with the time frame that you're looking at, which is 1 hour. So on this 1 hour time frame, this is the only one that we see. Other than this, there's nothing else. There's just this bullish candlestick. Now if I go to the 30 minutes, I want to see if there's any internal support at this point. So let's check 45 minutes first. So on the 45 minutes, this is it. There's nothing here. It's still green. Now let's go to the 30 minutes. On the 30-minute time frame, there's also nothing. It's all green. Okay, so after the 30 minutes, there's nothing else. We just go and just focus on the 1 hour. So with this one here, we can see what are we going to look to do is to just buy around this previous higher low. Okay, so this is where you would go ahead and place your buy and then just target this top part here as your take profit, and you can see how amazing that played out. Really amazing, guys. I can show you a lot of examples. This is literally one of the best way to just analyze the market. I find it so much easier. I don't have to have so many different lines on the chart, and then with this way of analyzing, I'm consistently profitable. Okay, so I'm going to end it here for now. Actually, you know what, let me actually give you guys one more example. Okay, here, so we have, this is an uptrend, price is in. Okay, we have a high over here, which the price broke. Then we have a low point right here. This is our higher low, whatever you call it. Okay, now our internal support is right over here. This is our internal support. So now with this internal support, we can see the price when it came, it actually didn't hold. Okay, we know it didn't hold because we didn't get a 1 hour candlestick closing at that support. Instead, the price actually broke below it. If the price breaks below it, it's no longer valid. Now we look at the next internal support. In this case, the next internal support is this one right here. Okay, so what I'm going to do, I'm going to mark this internal support instead. So here, I mark this 2 candlestick because that's the next internal support. Now with this one, what do we notice? We notice when the price came to it, it didn't break it. Okay, we didn't get any bearish candlestick breaking below it. Instead, we got this candle here. By the way, a break is when the price closes a bearish candlestick. Okay, if the price, this bearish candlestick had closed below that internal support, then it will be considered a break. But since it didn't do that, it's not considered a break. So what happened next is the next candle that started actually dropped all the way down to this point. And then at the end of the candle closing, it actually closed bullish. So this here would have been our confirmation to go ahead and go long. And then we are going to target halfway to this high as our TP number 1. Okay, halfway as a TP number 1, and then we target this top part here as a TP number 2. Okay, so what we can see is that the price actually made it halfway. All right, made it to the halfway point. So we would have made profit if we close to the halfway point. Now the second TP price came there eventually, but it returned back and then dropped. Okay, it dropped here back to this low point. Now you see this low point, guys. Like I told you, this point here is an area when the price comes to it, you have to just buy right away because you don't need any confirmation. All right, you buy here and then you just target this top part here as your take profit. So you can see when the price came to the previous higher low, what did it do? It went all the way back to that top part here, which is where you would have taken your profit and enjoy your money. And price continued going higher too, and then it finally hit the second TP. So this would have been a successful trade. Okay, so guys, I can show you many examples of this playing out. All right, but I think I'm going to end it here for now. You can go and backtest this yourself. Choose gold, GBPUSD, AUDUSD. These pairs are the ones that really respect the setup a lot. I'm sure there's many other pairs out there, but do this, start practicing, rewatch this video over and over until it all makes sense. I promise you, eventually it's going to make sense. Just practice it, take trades, test this out on a demo. Don't test it out on a live account yet until you actually understand it. Okay, so for this video, I just explained to you guys how to look for buying opportunities when the market is trending up. Now, on the next video, I'm going to show you guys how to look for selling opportunities when the price is in a downtrend. Okay, so make sure you subscribe to the YouTube channel. Give this video a thumbs up if you enjoyed the lesson and everything, and turn on your notification bell to stay notified when I post the next video. Thank you guys for watching. Take care. Make sure to also join the Telegram group. The link is listed below the description box of this video. I'll see you guys in the next video. Take care and bye for now.